Welcome everybody, and thank you for joining us on this webinar for our What's Up Wednesday. Joining me today again, our CEO of Foundation Fund Managers, Hayden Little. Hayden, welcome. Thank you so much for joining us this morning.
Morning, Gary. Good to see you on 17th of November. Can you believe it? The year is fast ticking by, almost done.
Crazy. I think we worked out we've got like 13 working days left before I go on my holiday. It's actually frightening. But anyway, we'll try and make the last.
Then it's a round dozen.
Yeah, absolute. So Hayden, just a little bit of a wrap up of the week. Things were looking up quite nicely for the Rand early November, and we strengthened to about the 1487 mark after opening at like 1547, which was quite nice. But then on Wednesday, we took a smack and we ended up being at like 1543 to the dollar. What actually happened?
Yeah, the Rand, it looked like we were going to put it, the month's not over yet, but we are under pressure right now. But it did look like we were putting together a nice little run, opening the month quite weak, as you mentioned, at 1547. And that at the time was the worst level for the year. And incremental gains over a number of trading sessions took us to 1487. And then on Wednesday last week, that's Wednesday the 10th of November, US inflation data just completely depth charged us. There's been the reason for our strength earlier in the month, because the Fed met in the first week of, the Fed being the American Central Bank, they met in the first week of November. Jerome Powell came out and, as he has done time and time again, poured a lot of cold water on speculation around US interest rates automatically going up in mid-2022 when the Fed stops or finishes their tapering program, i.e. they're currently buying $120 billion of assets a month. They've agreed in November to trim that by $15 billion per month and bring that number down from 120 to 105 and so on and so forth, and eventually get to zero, so not buying any assets. And the market had been sort of assuming that once that process is done, they then move straight on to hiking interest rates in the States from pretty much near 0% at the moment. Jerome Powell came out and said, no, guys, we will be finishing around mid-2022, call it May, June, July, somewhere around there in terms of the taper program. But then hiking interest rates has got a totally different set of tests that they need to satisfy before they're happy to push interest rates higher in the States. And that could take some time to satisfy. And the market then immediately went from interest rate hikes in June, July to interest rate hikes in October, November 2022. That's dollar negative, and the Rand enjoyed a little time in the sun. 1487 is where we got to. But on Wednesday last week, US inflation was forecast to, it's really, really high. It was forecast to come in from 5.4% up to 5.7 or 5.8%. The actual number came in at 6.2%. That's the highest inflation in the States since 1990. So it's 31 years or a 3-decade record, and is even above what we would tolerate in South Africa. Our inflation target range is between 3% and 6%. We're currently sitting at 5%. So the States at 6.2%, that's way higher than, a lot higher than their target of 2%, and has really just increased speculation that, hold on, maybe the Fed won't be able or won't afford to be as patient as Jerome Powell is talking. It's brought forward those interest rate hiking speculation dates from October, November back to June, July 2022. And that's dollar positive. And the knee-jerk reaction was the Rand from 1487 to 1547 in a day.
Wowee. Yeah. So as it stands, US inflation currently higher than South Africa, cause for concern. So the Rand's come under massive pressure from the US forecasts, and obviously inflation being the big concern for us. Our new finance minister, he delivered his medium-term budget speech the other day as well. How's this been received by the currency market?
Sure. That actually was very well timed. Our budget speech coming on Thursday, the day after the US consumer inflation print, purely because, it's a new finance minister. We're not too sure about his policy. We're not too sure about whether there was going to be continuity from Tito Mboweni, that was a well-respected finance minister and a person who really drew a hard line in curbing, if not reducing, government expenditure. Enoch Godongwana, our new finance minister, he found himself in the fortunate position of having an additional 120 billion rands to play with. And this is a tax revenue windfall that SARS has been able to generate because of the huge demand for our resources that have left South Africa over the past year, thanks to international demand in their post-COVID recovery initiatives that everyone's building and trying to kickstart infrastructure projects. And we're a beneficiary of that as a supplier of the raw materials going into those projects. So with an extra 120 billion rands to play with, there was a lot of speculation, or not speculation, but just concern that Godongwana was going to succumb to political pressure to increase social spending, to increase government wage bills, and put in place additional expenditure that's not sustainable. Because remember, this $120 billion that extra that we've received, we're not likely to get it again next year and the year after that and the year after that. You know, that spike in resource exports is going to plateau at some point. Fortunately, he pretty much did what Tito would have done. So, you know, doffed a hat to the money that's come in and made a mention of social grants and spending and the importance of supporting our really poor communities that have suffered from COVID and its impacts, but not committing to any additional expenditure. Of course, the additional monies that are brought in have improved our fiscal metrics, and the market liked it. You know, it looks like he's done more than enough to satisfy the credit rating agencies. Whether they increase our rating is to be debated, but they more than likely won't cut us further into junk status. So the rand, while we slipped to 15.40 and hung between 15.30 and 15.40 after the US CPI print, that was actually pretty good going, because the dollar continued to strengthen against other currencies over Thursday, Friday, and even Monday this week. And we treaded water, we held our own. So that's a thumbs up budget speech, well received.
That's great. And that was obviously one of the factors that came from it was our drop down to 15.16, which is well appreciated for those who are wanting to take some money abroad. But it bombed out again. I mean, we went to 15.55, which is like a record high for us in 2021. What was the culprit this time?
Yeah, exactly right. You know, we started the week on the front foot. Of course, the budget speech feel-good factor pulled into the early session on Monday. And we also had news out of China, where there's been a couple of question marks over Chinese economic performance. They've had one or two patchy months for a number of reasons. But on Monday, we found out their industrial output, and I think it was retail sales, were a lot stronger than the market forecast. And when China does well, that's just good for the rand by default, because we're a major trading partner of theirs. 15.16 is where we got to by midday-ish on Monday, and it looked like we were going to make a run at 15 flat. But then yesterday, and again, well, there were three factors, but the primary factor was out of the US. Their retail sales for October came in way higher than expected. And this was a bit of a surprise, because on Friday last week, we had a US consumer sentiment survey run by the University of Michigan. And that put consumer sentiment in the States at a 10-year low, purely because inflation is running so hot. Inflation is going above wage growth, so you get negative real wage growth. And they said that the people in the States, by and large, were unhappy with this and more than likely not to go rush out and spend. That knocked the dollar back slightly on Friday. Turns out that it's not the case at all. The cashed up American consumer, as they're being called, because they've got stimulus money overflowing in their bank accounts, have been shopping up a storm. And US consumer or retail sales came in at 1.7% growth in October. That's quite considerably above the 1.4% projected. And it just points to the rude state of health that the American economy is in. And that was very positive for the dollar. And it's the dollar index shot up to 96 points, which is the highest it's been since July 2020. and the rand was in the way, and we got steamrolled. There were two other factors that counted against us yesterday, just to add fuel to the fire. One of the federal presidents, a guy by the name of James Bullard, who's quite hawkish in his tones, he always talks about the Fed being a little bit more aggressive in tightening policy and bringing interest rates or hiking interest rates sooner than the rest of the Fed talks about. But yesterday it was his turn to take the mic, and he continued with this narrative, saying that the Fed shouldn't be doing $15 billion a month in tapering. It should be more than that, so that they finish sooner than projected, so that they can hike interest rates sooner than the market's currently expecting. That's dollar positive. And then lastly, Turkey didn't do us any favors yesterday. Turkey's central bank is becoming increasingly less independent from President Erdogan. He is, shall we say, flouting conventional economic wisdom, pushing their central bank to cut interest rates, even though Turkey's inflation is at just under 20%. And they did a 2% or a 200 basis point cut about a month ago. That hurt the rand when they did that. And they've got their policy meeting tomorrow, and it looks like they're going to do another cut, potentially only 100 basis points. But still, when you consider that central banks usually move at 25 basis points, which we might do tomorrow afternoon, 100 basis points is quite an outsized move. And if you're cutting when you should actually be hiking, the Turkish lira fell by 4% yesterday alone, and we got caught in the crossfire. So 15.55 to the dollar, a new low for 2021. Hopefully that is the record. We don't go any higher than that, but right now we're under a bit of pressure.
Sure. Wow, that's a lot to take in. So in closing, is there anything locally that we can look towards that could potentially move the rand, either positive or negative?
Yeah, definitely. We've been very quiet on the local market data front for the last few days, but today we get our own consumer inflation print. I think that's out at 10 or 11 o'clock today. The forecast is for us to stay at 5%. And, difficult to see that given how the price of petrol has just rocketed north over the last few months. And if there's any pull through on higher energy prices, higher fuel prices into food and the rest of the basket, to my mind, that says inflation should be going up. But let's see what actually happens. And then tomorrow we've got our own monetary policy committee meeting. Lesetja Kganyago, our SARB governor, will be, I don't know, the jury's kind of out. Are they going to keep our interest rates at 3.5%? That's the repo rate. So prime is at 7% off the back of that. Or are they going to follow the rest of the world? Emerging markets around the world, not all of them, but most of them have already started hiking interest rates to try and protect their currencies against the dollar, because the dollar is going up due to Fed interest rates or imminent interest rate hikes. We're pretty late to the party, but fingers crossed we do something tomorrow, which should be rand positive. And if we get a higher than expected inflation print today, i.e. anything above 5%, call it 5.2, 5.4%, that really will force the Reserve Bank's hand in hiking interest rates tomorrow. And hopefully that's rand positive and allows us to claw back at least maybe to 15.30s and below.
That's fantastic. Well done, Hayden. Thank you for that very concise summary. I hope that you enjoyed the rest of your Wednesday, and let's pray for some positive outcomes tomorrow, and we'll catch up with you next week, Wednesday.